when should you swap out the stocks that you already own if you're a dividend investor? If you've watched one of my earlier videos and I recommended some companies, but now I recommend other companies, should you swap those out for the newer stocks? Not necessarily. So in this video, I'll go over when to buy, sell, and hold as a dividend investor, especially if you're just starting out, or for anyone really. So when it comes to investing, I like to play the game that's easiest to win. Australian companies, especially on our stock exchange, generally pay pretty good dividends with high yields. We don't always have the same growth as companies in, say, the US. We don't have the same volatility as, say, Hong Kong. Different markets means different ways to invest. Now, that doesn't mean that you can't invest any way you want. There are many ways to make money when you're investing in stocks. There's not just one way. But for me, in the Australian market, dividend investing makes sense because most of our companies don't have that growth. They pay really high dividends and they're generally pretty stable. And I don't want to spend my time just watching the markets every day either. I want something simple. So let's get into some questions. One of the most common and emotionally charged questions I get is, should you sell your current dividend stocks and buy the ones that I'm recommending in my latest What to Buy a Month video? This is usually based on FOMO, that you've chosen the wrong company, that there's a better company for you to invest in. You're scared that you've picked wrong, and that's not necessarily the case at all. When I do What to Buy in July or whatever videos, it's usually for two reasons. One, to show my research style and how I research different dividend stocks, and two, what I would buy if I was buying in that particular month. That's not to say that what I recommended 6 months ago are bad companies. They're usually pretty good companies as well. It just means that right now, if I was buying, that's what I would probably buy. But I'm not always buying. What about when a company that you've bought hasn't gone up in price much? Should you replace it then? If you're a new investor and you've only held the stock for a short amount of time, usually the answer is no. You want to focus on income stability rather than price growth in the short term. You can look at that in the long term perhaps, but for the short term, you're just focusing on income stability. What about if you find a company that has a better yield than one that you already own? Should you switch out then? If you're just comparing dividend yield, then no, not necessarily. You really want to look at dividend stability and growth over the long term. Remember that the current yield that's showing in your trading account or online is based on the current price, and it's not necessarily the price that you paid. You might have paid a different price. You probably did pay a different price than what the current price is. If the price is growing over time, it's very likely that the yield that's being shown on websites is a lot lower than what your current yield is going to be based on the price that you paid. So over time, with dividend growth, you are probably getting a higher yield and a higher return for your money over the long term, if the dividends are stable and growing, which we hope that they would be. Okay, so how often should you be changing the stocks in your dividend portfolio? Now, the less trading that you can do, the better. Not only will it save you on trading fees, research has actually shown that trading more often results in lower returns overall for most investors. So generally, I don't like to sell very often at all. I will only sell on very specific circumstances. My preferred way to hold stocks is to hold forever. I want to get that income coming in forever. Just keep putting that money into my bank account, please. I don't mind, because I love those dividend paying days. And you can't get those dividend paying days if you're not holding the stock. So the reasons I would sell, and again, I don't do this very often, is usually because they've either stopped paying dividends altogether or the dividend has been decreased due to company instability. Sometimes a company might just have very poor fundamentals, and even though they're trying to keep up with a good dividend, the rest of the company is not doing well. So if the company drops in price quite dramatically, I would be looking at it then, because we do want growth as well as dividend income. And then of course it comes down to, sometimes you just need to take some money out of your portfolio, and that's valid too, depending on your circumstances. So generally, I don't like to sell. I want to hold forever. And the only reason I would sell is if the company cut the dividend or was just not financially doing well at all. But that doesn't happen very often. So when should you be buying dividend stocks? Again, this comes down to, do you have the money to do so right now? What I generally like to do is put a bunch of companies that I'm interested in buying onto a watch list. And when I have the money to invest, that's when I go in and choose one of them. So I might do research a few times a year, but I might only buy once, maybe twice a year. Most of the time, I'm just holding the companies that I have. And very often when I am buying, I'm just adding to companies that I already own, mostly because my portfolio is diversified enough now, so I don't need to add any more companies. I'm quite happy with the level I have. If you've only got a handful of companies, you might be adding newer companies. But if you've got a good range, maybe you're just adding to the companies that you already hold. Should you have your whole portfolio around just dividend stocks? This comes down to what type of investor or what type of stocks would you like to hold. I like dividend stocks, and I hold companies that generally pay quite good dividends. There have been times in the past that I've bought for growth or for any other reason, which is completely valid. It really comes down to what you want to do. There are many ways to play this game. I just like the nice, simple dividend investing, but it's not the only way to make money in the stock market. You really want to think about your risk profile, the type of market that you're in, and just what you actually enjoy doing. I like buying single stocks. It's fun for me and it's become very profitable, but you may love a different way of investing. It doesn't really matter. Your portfolio should be unique to who you want to invest in. How often should you check or review your dividend portfolio? So I don't like to look at mine too often. I do because I'm doing research all the time, so I tend to look at it for that. But the only time I really look at it is when I want to know when the dividends are being paid. What dividends are you paying me this month? That's what I want to know. So I generally don't focus on the overall value of my portfolio, although sometimes when it dips dramatically, like it did back in March, I get a little antsy. And I also know that those dips are a great time to buy if you have the money to do so. But generally, I am not checking my portfolio very often at all. I only want to know, when are you paying me dividends? When is that money going to hit my bank account? So the best way to invest is the one that helps you sleep at night, that isn't going to stress you out. So you don't want to get too emotional or too reactive about what the market is doing at any one particular time. Investing a little bit over time is a good way to do it. Not only will that give you a dollar cost averaging, depending on what the price is doing, you might be buying more or less at a different time, but it also gets you in the habit of investing consistently. Plus, it makes you less reactive over small price fluctuations. Sometimes there's going to be big price fluctuations, but overall, over the long term, the stock market has gone up over time. Not every single company, but generally, if you have a good diversified portfolio, it should be going up over time. And as a dividend investor, your dividends should be growing and going up over time also. I haven't planned my next week's video yet, so if you have any thoughts, put them down in the comments below. Otherwise, I will just come up with a brilliant idea. In the meantime, happy investing, and I'll see you in the next one. Mwah.